look, instead of stock of the day today, that I choose, because everyone, as you pointed out, Luke, everyone's so doom and gloom at the moment. It's for once in a while we have a sunny day here in Sydney, so I thought we'd do sunny day stocks from you two, stocks that you find really positive in the market at the moment. Luke, let's kick off with you.
Yeah, well, look, I've gone a little bit outside of my normal range, Koshy. The furthest I could go, actually, I've picked CSL. And
hang on, whoa, hang on, Luke, Winchester, let me just check the audio here. Did you say CSL?
I did. Normally, I'd say 130 mil market cap, but I think this one's 130 billion.
Billion, so yes. You're a micro man.
Yeah. Well, let me explain why. We are in a market that's so volatile and there's so many moving factors to it. You can definitely make the argument for wanting to look at defensive stocks. And I don't think they get any more defensive than something like a CSL due to its size, due to its industry. And I think more importantly, I saw them do something very interesting the other week, which I think you'll see a lot of other larger blue chip businesses do, which is really use their balance sheet to their advantage. So CSL came out and took on some new debt, refinanced and really extended the life of that debt. Now, in a normal environment, businesses do this from time to time, but if we're about to enter an inflationary environment, businesses that have the capacity on their balance sheets to take on that really long-term debt, which means that as their revenues grow over time and faster than what would be expected because of that inflationary environment, if they can obviously pass on those price increases to their end customers, then you're locking in debt today that you will pay off with heavily inflated revenues into the future. So I think that's something you'll see a lot of these larger businesses do. Right. Where Claude and I play, it's a bit more difficult. Debt's tough for them. You have operating businesses that can't really handle it. So that's why I've sort of crept up a bit, and I've thought, okay, let's find a business that as you sort of said, let's try and remain positive and look for a business that can withstand what we may see over the next few years. And I really liked what I saw from CSL and what they did with their balance sheet. It was a couple of weeks ago, and I think it's something you'll see a bunch of other blue chips do as well.
Really good point. And Claude, what about you? What's a sunny stock? Oh, are you on mute?
Oh, you're muted.
Oh, there you go. We got you. Oh. No, we still can't hear you. Was that from our end or your end, Claude?
I think you should be able to hear me.
There we go. You're good?
Yep. Have you got me now?
Clear. Yes.
Yep.
All right, great to be here. So mine's a similar theme to Luke. In its healthcare situation. So I guess, even if there's volatile times, you can have demand for healthcare. But Ramsay Health Care is my idea, and it's actually been a bit of a solid one in my portfolio recently because it's a takeover arbitrage. So it's got a takeover offer at about $88, and its current share price is about $77. And before its takeover became in play, its share price was down at around $68 or a bit below. So you can see there's some upside if the takeover goes through at $88, and so some downside if this takeover falls through and it goes down. And I won't go on about the takeover situation because I actually talked about that on the call not so long ago. But it's not really too correlated with what's actually happened in the market unless I guess the takeover price goes down a little bit. And then my thinking is if it does fall through, I still have a high quality healthcare business that, like Luke was saying, has the ability to take on debt. And, I think healthcare is something that is reasonable to own in an inflationary environment.